When you or I need to borrow money, we typically approach a bank and offer our home or some valuable asset as collateral. On the other hand, the wealthiest individuals globally have a different approach. Instead of selling their shares and incurring capital gains taxes, they use some of their shares in public companies as collateral to secure lines of credit. Pledging shares involves an individual using their stake in a public company as collateral to obtain personal lines of credit for various purposes, such as real estate investment, investing in other companies, or purchasing more of the pledged stock. The advantages of this practice are evident. It enables shareholders to access cash while maintaining their influence within the company and avoiding capital gains taxes. Since 2006, the Securities and Exchange Commission, SEC, has mandated public companies to disclose pledged shares of executive officers, directors, or individuals holding more than 5% of a company's outstanding stock. Notably, a small fraction of the wealthiest individuals, specifically 32 members of the Forbes 400 list, contribute significantly to the total value of all pledged shares. Tesla CEO Elon Musk is renowned for pledging company shares, but an equally intriguing example is Larry Ellison, the co-founder of Oracle, who has utilized share pledging to finance substantial real estate ventures while safeguarding his control at Oracle. Corporate governance becomes a crucial issue when it comes to share pledging. Over two-thirds of S&P 500 companies prohibit all employees and shareholders from pledging shares for debt, and only a few permit it without restrictions. Critics argue that pledging creates a misalignment of incentives between shareholders, contending that pledges, by diversifying their wealth through debt-financed investments, diminish their immediate economic interest in the company's success. A significant risk associated with pledging is the potential for margin calls if the stock price of the pledged shares drops. Lenders may demand additional collateral, leading pledges to sell a substantial amount of the pledged stock, putting downward pressure on share prices and causing concern among outside shareholders. While some companies defend pledging, emphasizing its role in creating a fiduciary relationship between pledges and shareholders, opponents raise concerns about the impact on company stock and governance. It's important to acknowledge that share pledging represents only a fraction of the overall assets pledged for debt in the market. In the realm of billionaire borrowing, many aspects remain undisclosed, such as collateralized private stakes and diversified baskets of securities. The world of billionaire borrowing, particularly concerning share pledging, remains somewhat opaque, with much still unknown.